We, the people of the United States, in order to form a more perfect union, establish justice, ensure domestic tranquility, and secure the blessings of liberty to ourselves and our posterity. The Constitution promises justice and equal protection under law. It does not grant exceptions for offshore shell companies, nominee ownership structures, or nine-figure financial flows routed through United States territories. When $606 million moves through a network of opaque U.S. Virgin Islands entities, while a 90% tax exemption shields the assets, the question is not political, it is constitutional. The 14th Amendment guarantees that no state shall deny any person equal protection of the laws. That principle does not stop at the water's edge. This is why we follow the paper trail. Before we begin, here's what this episode covers. 9 entities incorporated in the U.S. Virgin Islands, all controlled by Jeffrey Epstein, his attorneys Darren Indyke and Richard Kahn, or nominees acting on their behalf. $606.9 million flowed into just one of those entities, Southern Financial LLC. $14 million in tracked wire transfers moved between USVI entities. Southern Trust Company obtained a 90% tax exemption through the Economic Development Commission. Its assets grew from $198.5 million to $391.3 million over 4 years. The Butterfly Trust, established at Deutsche Bank in 2013, made over 120 transfers to women with Eastern European surnames. Stated purposes: tuition, rent, hotel, immigration expenses. Little St. James Island, purchased for $22.5 million, was held behind Great St. Jim LLC, with a foreign national listed as beneficial owner. 2 shell entities were created on the same day, August 14, 2018, both with Darren Indyke as sole signer. In December 2022, the USVI Attorney General settled for $105 million, naming 10 Epstein entities. 9 entities, $606 million, 1 island, 0 transparency. Nine. That is the number of entities incorporated in the U.S. Virgin Islands that were controlled by or connected to Jeffrey Epstein. 14,187,006 in tracked wire transfers moved through these entities, and one of them, Southern Trust Company, obtained a 90% tax exemption from the USVI Economic Development Commission. 90%, on $391.3 million in assets. This episode is about the offshore machine that made those numbers possible, the entities, the structures, and the people who operated them, all within a U.S. territory 1,000 miles from the mainland. What is the USVI advantage? The U.S. Virgin Islands Economic Development Commission offers qualifying businesses up to a 90% reduction in corporate income tax, 100% exemption from gross receipts tax, 100% exemption from excise tax, 100% exemption from property tax for the first 10 years. In exchange, the business must maintain a physical presence in the territory, create local employment, and make a community contribution. But here is why this matters for an Epstein investigation. The USVI is a U.S. territory. That means domestic jurisdiction, No mutual legal assistance treaty required for U.S. law enforcement. It means U.S. banking access, no offshore reporting triggers. It means privacy. USVI corporate records are less accessible than most state registries. And for Epstein specifically, it meant proximity. Little St. James Island sits 80 miles from St. Thomas. The trade is simple. U.S. jurisdiction plus a near-zero tax rate. A domestic offshore haven. Here are the 9 USVI entities we have identified in the corpus. Financial Trust Company, Incorporated, established 1996. Epstein sole stockholder. This was the money management firm. Southern Trust Company, Incorporated, November 2011. This is the entity that obtained the 90% tax exemption. Southern Financial LLC, the pass-through vehicle, $606 million inbound. JEGE LLC, held the Gulfstream IV aircraft, sold to Thomas Huff in June 2019, 1 month before Epstein's arrest. Plan D LLC, held the G550 aircraft, registration November 212 Juliet Echo. Larry Visosky listed as manager. Gratitude America Limited, a 501c3 charitable entity, EIN 660789697, peak assets $10.2 million. Great St. Jim LLC, held Little St. James Island, valued at $22.5 million. A foreign national, Sultan Ahmed bin Sulayem, listed as beneficial owner. Southern Country International, wired $1.66 million to HBRK through a Charles Schwab account. FT Real Estate Incorporated, wired $3 million to Indyke for real estate through a First Bank Puerto Rico account. 9 entities, 1 jurisdiction, 3 attorneys, 0 transparency on beneficial ownership. Source check. This episode draws on 6 independent evidence types. Wire transfers, 224 records extracted from Deutsche Bank statements in DOJ Dataset 10. The TD Bank SAR, a FinCEN suspicious activity report documenting $47.3 million in suspicious activity across 25 subjects. The NYDFS consent order, the 37-page document behind Deutsche Bank's $150 million penalty. FedEx invoices, 23 shipments with USVI destinations, drawn from the 2894 total we analyzed in Episode 6. The USVI Attorney General complaint, filed January 2020, settled December 2022. And entity ownership research from corporate registries, LEI databases, FAA records, and IRS 990 filings. Known limitations. These wire transfers represent only Deutsche Bank and TD Bank activity. We have no records from USVI local banks. The $606.9 million Southern Financial figure comes from SAR reporting, not an independent audit, and the tax exemption details come from the NYDFS consent order, not from the USVI Economic Development Commission directly. Financial Trust Company, Incorporated, established 1996. Jeffrey Epstein was the sole stockholder. This was the money management firm, the entity that handled financial operations from the USVI. In the wire transfers, we see one inbound wire, $137,006 from Bill Doherty in June 2010, In the FedEx records, this entity appears as a return address. Specifically, it is the address that K.L. Gordon used when sending packages. The same Suite B3 address was shared with Gene Brennan. Financial Trust Company is one of our cross-domain leads, appearing in both FedEx shipping records and wire transfer data, with a total tracked value of $137,405. This is the first entity in the USVI architecture, established 3 years before Epstein's first known criminal investigation. It would remain active for over 2 decades. Southern Trust Company, Incorporated, November 18, 2011. This is the entity that obtained the 90% tax exemption from the USVI Economic Development Commission. What does 90% mean in practice? In 2013, Southern Trust held $198.5 million in assets. By 2017, that had grown to $391.3 million, a 97% increase, $192.8 million in growth over 4 years. At a 90% tax exemption, the effective tax on that growth was a fraction of what it would have been on the mainland. In the wire transfers, we see $13.9 million moving into Southern Trust across 3 wires, $13,600,000 and $300,000. All Fed wire transfers, all internal, meaning they came from other Epstein-controlled accounts. Southern Trust was not receiving money from outside. It was receiving money from Epstein's own network. The 90% exemption applied to assets he was moving between his own entities. Southern Financial LLC, LEI number 549300 KB8YL 2XC7B4K14. $606.9 million inbound. $194.7 million outbound. $412.3 million net retained. Let me say that again. A single LLC incorporated in the U.S. Virgin Islands retained $412 million. In the TD Bank SAR, we see $7.75 million flowing from Southern Financial to Harlequin Dane LLC, one of the 2 shell entities created on August 14, 2018. Southern Financial LLC is a cross-domain lead in our synthesis engine, appearing in both wire transfer data and bank document classifications. This entity is the center of mass. Whatever the USVI corporate architecture was designed to do, Southern Financial was where the money pooled. The $13 million internal transfer. 3 wires, all terminating at Southern Trust Company, Incorporated. $13 million, $600,000, $300,000. Total, $13.9 million. All 3 originated from Epstein-controlled accounts. All 3 cleared via Fedwire, the domestic wire system. All 3 were internal transfers, meaning there was no external counterparty. This is not a business receiving payment for services. This is not revenue. This is money moving from one pocket to another, both pockets belonging to the same person, into an entity that had a 90% tax exemption. No business purpose is documented in our records for these transfers. That doesn't mean none existed. It means we cannot find one. The Butterfly Trust. Established 2013 at Deutsche Bank, an irrevocable trust. Over 120 transfers went to individual beneficiaries. described in the NYDFS consent order as women with Eastern European surnames. Stated purposes for these transfers: tuition, rent, hotel expenses, immigration expenses. A UK passport holder appeared on the beneficiary list. In our wire transfer records, we see $150,000 moving into the Butterfly Trust on February 5th, 2019, from HBRK, the law firm of Darren Indyke and Richard Kahn. The NYDFS found that Deutsche Bank failed to scrutinize the nature of these payments. No enhanced due diligence was performed on the identities of the beneficiaries. This failure was cited as part of the $150 million consent order. We present these facts as documented in government records. The pattern of payments, over 120 transfers to young women for living expenses through an irrevocable trust at a bank that was later penalized for failing to investigate, is in the public record. We add nothing to it. We simply make sure it is not overlooked. Post-death restructuring. Jeffrey Epstein died on August 10, 2019. After his death, $13 million was moved from the Butterfly Trust to 3 new shell entities. The beneficiaries of those new entities were Darren Indyke, Richard Kahn, and their spouses. The attorneys who managed the trust, who had been Epstein's in-house lawyers for over 15 years, became its beneficiaries. This is documented in the USVI Attorney General's complaint. The Butterfly Trust did not dissolve when Epstein died. It was reorganized. The 120-plus transfers to women with Eastern European surnames stopped, and $13 million moved to entities controlled by the lawyers who had built the structure. We present this as documented fact. We do not characterize the legality of this restructuring. That determination belongs to regulators and courts, not to a data analysis project. But the sequence is in the record. Epstein dies. The trust is reorganized. The attorneys become the beneficiaries. The pass-through pattern. Let me show you how the money moved. External sources send $606.9 million into Southern Financial LLC. Southern Financial is an LLC, a pass-through entity. It does not hold money, it moves money. From Southern Financial, $13.9 million flows to Southern Trust Company, the entity with the 90% tax exemption. Southern Trust manages the Butterfly Trust, an irrevocable trust. The Butterfly Trust distributes to individual beneficiaries, over 120 transfers documented. Each layer in this architecture adds something specific: a new legal entity, a new barrier between the money's origin and its destination, a new jurisdiction-specific protection, tax exemption, trust irrevocability, LLC privacy, a new layer of beneficial ownership obscurity. Each entity has its own officers, its own registered agent, its own paper trail. This is not speculation. This is what the financial records show. Money enters the system at $606 million. By the time it reaches individuals, it has passed through at least 3 layers of USVI corporate architecture. The pass-through pattern. JEGE LLC. Filed October 19, 2012. This entity held the Gulfstream IV aircraft. JEGE appears in 2 evidence domains: bank documents and FedEx shipping records, with 1,428 events in our synthesis bridge. But the critical event is this. In June 2019, JEGE LLC was sold to Thomas Huff. 1 month later, July 6, 2019, Epstein was arrested. We do not know why the entity was sold. We do not know the terms. We do not know whether Huff was aware of what would follow. What we know is the timing. An aircraft holding entity incorporated in 2012 sold in June 2019, 1 month before the principal's arrest. In the FedEx records, JEGE's hangar at 1514 Perimeter Road appears as a shipping address. 4 shipments to or from this address. Rosemary Pitcher, the jet aviation employee we covered in Episode 6, signed for deliveries at this location. Plan D, LLC. This entity held the Gulfstream G550, registration November 212 Juliet Echo. The manager listed was Larry Vysotsky, Epstein's chief pilot for decades. Vysotsky appears in our FedEx records as both sender and recipient. He appears throughout the 4286 flights extracted from handwritten flight logs. One detail on the tail number. November 212 Juliet Echo was previously assigned to a different Epstein airframe, a Boeing 727. When Epstein transitioned from the 727 to the Gulfstream, the N212JE registration was recycled to the new aircraft. This means 2 different airframes, different types, different eras, carried the same tail number. That detail matters because flight logs referencing November 212 Juliet Echo span both aircraft. The FAA registry confirms the reassignment. Our corroboration report documents both airframes and the transition date. Plan D is a straightforward aircraft holding entity. Its significance is operational. It held the plane, Vysotsky flew it, and the corporate structure ensured the aircraft was owned by a USVI LLC rather than by Epstein personally. Great St. Jim LLC. This entity held Little St. James Island, valued at $22.5 million. The beneficial owner listed on documents was Sultan Ahmed bin Sulayem, the chairman of DP World, a Dubai-based ports and logistics conglomerate. A foreign national, the head of a major international corporation, listed as the beneficial owner of a private Caribbean island that was, in practice, controlled by Jeffrey Epstein. This is what nominee ownership looks like. The island's true controller was obscured behind an LLC. The LLC's beneficial ownership documents carried a different person's name. The paper trail pointed to Dubai. The physical reality pointed to Epstein. We present this as documented in the USVI Attorney General's complaint and public corporate filings. The use of nominee beneficial owners is not inherently illegal, but it defeats the purpose of beneficial ownership disclosure, which is to identify who actually controls an asset. $22.5 million in island real estate, controlled by one person, owned on paper by another, held by an LLC in a jurisdiction with limited corporate transparency. Gratitude America Limited, a 501c3 tax-exempt charitable organization, EIN 660789697. Peak assets, $10.2 million. This is an entity where our records are thin. We know it was registered as a charity. We know its peak assets exceeded $10 million. We know it was part of the USVI corporate ecosystem. What we do not know: detailed grant or disbursement records, whether charitable purposes were fulfilled, how this entity related to the other 8 USVI entities in terms of money flow. We include Gratitude America because it existed, because its EIN is on file, and because a $10 million charitable entity controlled by a convicted sex offender in a tax haven jurisdiction warrants documentation. But we acknowledge the limits of our data. We cannot characterize what this entity did with its assets based on the records we have. FT Real Estate Incorporated, a real estate acquisition entity with a First Bank Puerto Rico account. One wire transfer in our records, $3 million, outbound to Darren Indyke. Stated purpose, real estate. Note the name, FT Real Estate. The FT likely abbreviates Financial Trust, connecting this entity to the financial trust company we covered earlier. Same ecosystem, specialized function. The pattern here is worth noting. An entity was created for a specific purpose, real estate. It was funded through a bank account in a separate U.S. territory, Puerto Rico. And the $3 million wire went to the attorney, Darren Indyke, not directly to a property seller. $3 million to the attorney, not to a title company, not to a seller, not to an escrow account, to Darren Indyke personally. In a legitimate real estate transaction, the buyer wires funds to a closing agent or escrow, not to their own lawyer. This is consistent with how the USVI architecture operated. Money moved through attorneys. Entities were purpose-built. Bank accounts were distributed across jurisdictions. We cannot determine from our records which property this $3 million was intended to purchase. We note only the structure, entity to attorney, with real estate as the stated purpose. August 14th, 2018. Two entities created on the same day. Harlequin Dane LLC, sole signer, Darren Indyke, inbound, $7.75 million from Southern Financial. Birchtree BR LLC, sole signer, Darren Indyke, inbound, $300,000. Same day, same signer, both receiving money from Epstein-controlled entities, both appearing in the TD Bank Suspicious Activity Report. 11 months later, Epstein was arrested. 12 months later, he was dead. We do not know why two entities were created on the same day. We do not know the business purpose of Harlequin Dane or Birchtree. We do not know whether the $7.75 million that flowed from Southern Financial to Harlequin Dane was the end of a money trail or a waypoint. What we know is the pattern. Entities created in pairs, controlled by the same attorney, funded by the same source, 11 months before arrest. These are the kinds of structural patterns that triggered the TD Bank SAR, and they are the kinds of patterns that make the USVI corporate architecture worth examining entity by entity. Little St. James, the shipping record. 23 FedEx shipments with St. Thomas, USVI as the destination. Date range August 23, 2001 through September 23, 2005. Key senders: Rosemary Pitcher, 3 shipments totaling 82 pounds. She was jet aviation staff based at the hangar. K.L. Gordon, 2 shipments. The recipient on both, Jean J. Doe, a name we will examine in the next slide. 1515 Perimeter Road, the JEGE LLC hangar address, 4 shipments, and 1 from Jet Aviation directly. Remember, FedEx delivers to St. Thomas Airport. From there, packages going to Little St. James had to travel by boat. Every one of these 23 shipments required a second leg of transport, from the airport to a private island. The shipping record shows us who was sending things to the island, what they weighed, and when. It does not tell us what was inside. K. L. Gordon and Jean Jade Doe. K. L. Gordon sent packages from Financial Trust Company's USVI address. The recipient on those packages, Jean Jade Doe. Who is Jean Jade Doe? Per court records, this is an alias for Jean Brennan, the same person who appeared as Jean Jame Doe in our Zorro Ranch analysis in episode 6. Note the pattern. At Zorro Ranch, the pseudonym was Jame Doe. From the USVI, it was Jade Doe. Different pseudonym, same person, same technique, and the alias was used only from Epstein properties, never from a personal address, never from a public location. K. L. Gordon had third-party billing access to Epstein's FedEx account. These shipments were billed to Epstein, not to Gordon. And here is the connection that ties it together. Gordon shipped from Financial Trust Company's address. Brennan received at Financial Trust Company, Suite B3. The same entity, the same address. The sender and the recipient both connected to Financial Trust Company in the USVI. Rosemary Pitcher. Jet aviation staff based at Little St. James. 19 total FedEx events, 3 as sender, 16 as signed by. As sender, 3 shipments to St. Thomas totaling 82 pounds and $737 in declared value. 40 pounds, 16 pounds, 26 pounds. As signed by, 16 separate delivery receipts at 1514 Perimeter Road, the JEGE LLC hangar. These span from May 2001 through December 2004. 3.5 years of signed delivery receipts at the same aviation facility. Why does this matter? Each signed by event is a physical presence indicator. Pitcher was there, at that address, on that date, receiving packages. 16 times over 3.5 years. Combined with her 3 outbound shipments, Pitcher has 19 documented FedEx interactions with the USVI aviation infrastructure. She is the most documented ground-level presence in the island's shipping record. Pitcher's role appears operational, aviation staff handling logistics. We note her presence because it is documented, not because it implies wrongdoing. The USVI shipping network. 23 FedEx shipments to St. Thomas between 2001 and 2005. The weight profile tells us these were not all documents. Rosemary Pitcher's shipments averaged 27 pounds each, 82 pounds total across 3 shipments. K. L. Gordon shipped at least 40 pounds. To put these weights in context, across all 2894 shipments in the corpus, the median package weight is 2 pounds. A 27-pound average is in the top 1% by weight. These are heavy packages, consistent with aircraft parts, equipment, or building supplies, not correspondence. 3 key addresses recur, 1514 and 1515 Perimeter Road, the JEGE LLC hangar, 4 shipments. Financial Trust Company, at least 2 shipments. And General St. Thomas delivery for island logistics. What does the shipping network show? Physical infrastructure supporting the island, an aviation facility functioning as a logistics hub, named individuals with repeated access over years, and third-party billing, the cost of all these shipments absorbed by Epstein's FedEx accounts. What it cannot show, what was inside the packages, whether any shipment served a criminal purpose. Shipping supplies to a private island is not unusual. Shipping supplies to a private island owned through an LLC, managed by a convicted sex offender, through an aviation hangar tied to an entity sold 1 month before arrest, that is a pattern worth documenting. We document it. We do not characterize it. The USVI Attorney General filed suit in January 2020. In December 2022, the case settled for $105 million. 10 Epstein entities were named in the action. Every entity we have covered in this episode: Financial Trust, Southern Trust, Southern Financial, JEGE, Plan D, Gratitude America, Great St. Jim, Southern Country International, FT Real Estate, plus one additional entity identified in the complaint. The AG alleged that Epstein used these USVI entities to facilitate trafficking, that tax exemptions were obtained through fraudulent representations, that nominee ownership structures concealed beneficial control. $105 million. For context, Southern Trust alone held $391.3 million in assets at its peak. The settlement amount represents roughly 27% of that single entity's peak value. We present the settlement as public record. The allegations are the AG's, not ours. The settlement does not constitute an admission of guilt, but it does represent the largest civil action taken against the Epstein corporate infrastructure in any jurisdiction. What the settlement covered. The $105 million settlement addressed civil claims related to Epstein's USVI operations, allegations of tax exemption fraud, allegations of trafficking facilitation through the USVI entity network, and the use of nominee ownership to conceal beneficial control. What the settlement required: financial penalties paid from the Epstein estate, dissolution or transfer of the named entities. What it did not include: individual criminal charges. No person was charged as part of this civil settlement. What the settlement documented, and this is important for our methodology. The USVI AG's investigation produced a detailed factual record: entity relationships, money flows, beneficial ownership chains. The complaint itself is a primary source for this episode. When we describe the nominee ownership of Great St. Jim LLC, or the Butterfly Trust's payment patterns, or the tax exemption on Southern Trust, those facts were documented in the AG's filing before we extracted them from our corpus. The settlement is both an outcome and a source. It tells us what the government found, and it tells us what they were willing to settle for. What remains unresolved? The $105 million settlement resolved the USVI Attorney General's civil claims. It did not resolve the factual questions behind those claims. Who were the 120-plus Butterfly Trust beneficiaries? Their names have not been publicly released. What was Southern Financial's $606.9 million used for? No independent audit has been published. Why was JEGE LLC sold 1 month before arrest? The settlement did not address this. Who directed the creation of Harlequin Dane and Birch Tree on the same day in August 2018? Indyke signed, but who instructed? Were the Economic Development Commission tax exemption conditions actually met? The employment and physical presence requirements remain unclear. What happened to the $412.3 million retained by Southern Financial? The final disposition is unknown. Who was the UK passport holder on the Butterfly Trust beneficiary list? The identity has not been disclosed. The settlement resolved financial liability. It did not resolve factual questions. Those questions remain open, and our data cannot answer them. We can only make sure they are asked. The tax fraud question. Southern Trust Company obtained a 90% tax exemption through the USVI Economic Development Commission. The EDC program exists to attract legitimate businesses to the Virgin Islands. In exchange for tax benefits, businesses must maintain a physical presence, create local employment, contribute to the community, and conduct legitimate business operations. Southern Trust's assets grew from $198.5 million to $391.3 million in 4 years, under a 90% tax exemption. The USVI Attorney General alleged that the tax exemptions were obtained through fraudulent representations. That is a specific allegation. It means the AG's office concluded that the conditions for the exemption were not met, that Southern Trust did not qualify for the benefits it received. We cannot independently verify whether EDC conditions were met. We do not have Southern Trust's employment records. We do not have their community contribution documentation. We do not have their internal business records. But the question stands: was Southern Trust a legitimate business qualifying for tax benefits, or was it a personal wealth vehicle, Epstein's own money, sheltered from taxation in a U.S. territory under a program designed for economic development? We cannot answer this, but it is the right question. And it is a question that the $105 million settlement did not fully resolve. Transparent science. What we showed: 9 entities, $606 million through 1 LLC, $13.9 million in internal transfers to a 90% tax-exempt entity, over 120 Butterfly Trust transfers, $13 million in post-death restructuring where the attorneys became the beneficiaries, a $22.5 million island behind nominee ownership, 2 shell entities created on the same day 11 months before arrest, 23 FedEx shipments including a pseudonym, and a $105 million settlement. What we interpreted, and this is one reading of the data, the pass-through pattern is consistent with layered asset sheltering. The same-day entity creation is consistent with preemptive restructuring. The pseudonym usage suggests deliberate identity obscuring. These are observations, not evidence of criminal intent. Other interpretations may be valid. What we did not claim: that tax exemptions were illegitimate. The AG alleged this. We did not independently verify. That Butterfly Trust payments served criminal purpose. That the August 2018 shells were connected to anticipated arrest. That $606 million represented illicit funds. What remains unknown: the identities of 120-plus beneficiaries, the full disposition of $412 million, whether EDC conditions were met, the contents of every package, who directed the post-death restructuring. These are not small gaps, and we name them explicitly. Transparent science. Every episode. Error log. SAR tags. The $606.9 million figure comes from SAR reporting. It has not been independently audited. Multiple entity claims in this episode rely on a single TD Bank SAR document. Tags. Our wire transfer data covers Deutsche Bank and TD Bank only. We have no records from USVI local banks. And one correction. The Butterfly Trust wire was originally misreported as $15 million. The correct figure is $150,000, corrected in script 16E. NYDFS tag. Tax exemption details come from the NYDFS consent order, not from the USVI Economic Development Commission directly. Corp tag. The inference that FT stands for Financial Trust is analytical, not confirmed. Tags. 3 calculated values. The $412 million net retained, the 27% settlement ratio, and the 97% asset growth. Scope tags. We did not access USVI local corporate registries. EDC compliance status was not independently verified. These are the known limitations. They are part of the record. Every episode, every error, documented. For U.S. Virgin Islands authorities. USVI Attorney General. You settled for $105 million in 2022. This corpus documents 9 entities, 3 of which were created after Epstein's death. Are the settlement terms being enforced? USVI Inspector General. Southern Trust Company held $391.3 million in assets while receiving a 90% tax exemption from the Economic Development Commission. The EDC program requires genuine business operations and local employment. Was Southern Trust a real business or a personal wealth vehicle? IRS criminal investigation. $412.3 million passed through Southern Financial LLC. The net retention, the difference between $606.9 million in and $194.7 million out, is $412 million. Where did it go? FBI San Juan Field Office. Harlequin Dane LLC and Birch Tree BR LLC were both incorporated on August 14, 2018. Same day, same sole signer, Darren Indyke. $7.75 million flowed into Harlequin Dane from Southern Financial. $300,000 into Birch Tree. These entities were created 14 months before Epstein's death. The evidence is public. The questions belong to the authorities with jurisdiction to act on them.